Recently, it was announced that the UK's financial watchdog had launched an investigation into a security breach at the Bank of England. This followed a Times report indicating that they had suffered an audio leak. The central bank admitted that hedge funds had gained early access to its market-moving press conferences via a backup audio feed. This backup audio feed is used for press conferences and had been used by a third-party supplier. The Bank of England stated that the supplier, without warning, had provided sound from the conferences ahead of the audio feed. Obviously, in the world of high-speed trading, the 4 to 8 second advantage enjoyed by these traders is a vast amount of time in terms of potential market movements. This had been ongoing for some time actually, with the Bank of England stating that these audio feeds had been misused by a third-party supplier to the bank since earlier this year to supply services to other external clients. Speaking of which, each client would pay between £2,500 to £5,000 each press conferences, in addition to a subscription fee. Comments from Bank of England officials about sensitive matters such as interest rate decisions can impact the value of sterling and other market assets within fractions of a second. So this 4 to 8 second advantage is clearly a pretty big deal. The Bank of England stated that the leak was without the bank's knowledge or consent and is being investigated further, with the matter referred to the market regulator, the Financial Conduct Authority. The company that provides the audio feed, which is separate from the video feed, has not been identified. Moreover, it was further revealed that the audio leak followed the loss of key cybersecurity staff the previous year. According to former employees at the Bank of England, at least 20 of the bank's staff tasked with information security had left or been reassigned elsewhere within the bank in the past year. This leak comes as the Bank of England prepares for the handover of power from Mark Carney, the outgoing governor, to Andrew Bailey, who is ironically the current chief executive of the Financial Conduct Authority. However, it is understood that Bailey will recuse himself from all discussions of the matter to avoid any suggestion of a conflict of interest. For more compounded valuable content, subscribe and like.